Tiny Saw with the market recap for the last week of 2012 and the look ahead for the first week of 2013. Let's take a look at the economic reports that are due out for the coming week. On Monday, it's a German bank holiday. It's New Year's Eve. I used to think New Year's Eve was a half day, but it's not. It's full day. And as we'll look at in a couple of minutes, we'll see that usually it's a dull day, but it's probably not going to be dull this time around. So talk about that in a couple of minutes. On the first, it's a holiday in Europe and in the United States, New Year's Day. The markets are closed. On Wednesday, back to business here with the ISM manufacturing at 10 o'clock in the morning. On Thursday, ADP non-farm employment, unemployment claims, and the FOMC meeting minutes. So that's Thursday the 3rd. And then on Friday the 4th, we have the job numbers as well as ISM non-manufacturing, factory orders, and they're going to do crude oil inventories, and then Yellen is speaking. So, I mean, for what's going to amount to be a 4-day week, I would say a 3-day week, but like I said, I think Monday is going to be a busy day, or at least have some volatility. It's sure packed with some key numbers here, so it looks like the year's going to get off to a flying start, and that's not a directional that's not a, what is that? That's not a directional phrase, flying. I guess perhaps a volatile start, or some at least having some travel range. Anyway, so what is all this talk about? Why will New Year's Eve be such a, or potentially be a volatile day when it usually isn't? Well, it's because we're cliff diving, and no, that is not a picture of me. I don't think I ever was this thin, maybe when I was a kid. But a lot of talk about the fiscal cliff. Now, I have said this for quite some time. If you're reading my emails or watching my videos, I believe that a deal gets done. I don't think that Obama is going to give all the concessions that the Republicans want. So I think that it will turn out to be a compromise, and we may get a relief rally because at least it's something, but I don't think it's going to be anything that's going to spark a big turnaround mega rally on the news alone. So, you know, as always, let's take a look at the technicals. Now, bear in mind, look at where the SPY closed according to TradeStations after hours. Another 70 cents down from where it closed on the session. I mean, it was a nasty sell-off, and you could see it better if you look at the S&P. You can see the 5, we'll throw up like a 10-minute chart, and I mean, look at this selling here, and it just continued. You know, this is the New York close at 4 o'clock, and it just kept selling. You know, it was pretty deep. I was in the chat room, and I was saying that, okay, I think we're going to hit 1391 and a quarter. I don't know if we're going to hit it today. And then as soon as we broke down, I said, okay, now we're probably going to hit it. But I didn't think it was going to another 9 points. Yeah, this was some cascade here. And you could see they're marking off the closing time still on TradeStation at 4:15, but really it's 5:15. That's when the session is closing on the futures. I don't know why they didn't just start it for 2013, but whatever, doesn't matter. You can see here it closed at 5:15 on Friday. So this is leaving us with a little corrective move up, which suggests we could go back down. But if you're interested in watching the market reopen live, I'm going to be opening the room on Sunday night at 6 p.m. I'm not going to, I'll probably be talking because I'll be there anyway, but I'm going to be doing a market discussion at 8 p.m., but I'm opening at 6 p.m. I'll probably be in and out between 6 and 8. I want to see what the index futures do on the reopen, see if there's maybe a trade setup, or just, you know, what the market's doing. But join me, and I will put a link to the chat room in the description of this video. You have to register, but it's free, and no payment required, or no credit card that's going to get cracked if you don't cancel. None of that, but you do have to register. Okay, so join me and we'll have a nice market talk at 8 o'clock. And like I said, I'll probably be there. I'll definitely be there before 6, but I'm not going to be doing a lot of talking before 8 o'clock. All right, anyway, let's take a look at the market here. And you can see the SPY came up, broke the 78.6% retracement here for a day, but then came right back below it and formed this dark cloud cover here. So that was a little bit of a concern, but I still thought we had a chance to pull back mildly and then push it up. But instead, no, we pulled back. And you can see here, all right, if you know, on this pullback right here to 143, you know, if it went the same distance up as it did down here, I mean, it gapped down through this, but just saying if it had gone to like a 143, even unless it would have had a more extenuating move than what it did, I don't know if we would have got there, although we would have been real close and maybe got there. But of course, that is just a complete fantasy land, because instead we moved lower and we shredded the 50-day moving average, and we got back above it. It's a really nice reversal on Thursday. Then we gapped down on Friday, and that tried to make a move, but that also sold off. I mean, it was just knocking. I know it knocked me around, and it was knocking me around both analysis-wise and trade-wise. I was zigging when I should have been zagging, because it was some pretty good volatility. But you know, it was a nice trade towards the end of the day, not the actual end of the day, but in the last half hour. But otherwise, it was, you know, two-way action, and it was looked like we were going to go higher. Well, first it looked like we were going to go lower. We went higher, then we went higher, and I was like, all right, watch this next pullback, and then instead we kept going down. So, I mean, if we're opening at 130, at 139.30, which I don't think we're gonna. I think it's going to be different than that number, but even that number, that would be the 200-day moving average. So this is a spot where we could see a bounce here. All right, so let's grab the Fibonacci tool out here, and let's do this little swing, and you could see that it comes right in between the 50 and 62%, 61.8% retracement, the 200-day moving average. So it could go there, test it, and then come back up. I don't know what it's going to do. I don't know what is going to happen. I believe Congress is getting together on Sunday night or whatever I'm reading. It really doesn't matter. I just want to be aware of when the news is coming out and what the reaction is. You know, I don't know what's going to happen. But like I've said, I think they're going to come to a deal, and I think it's going to be not what the GOP expected. So either that is going to cause a very brief relief rally, or it's going to be enough to continue to sell it. So whatever it is, this is not a nice looking pattern right here, the turnaround at the 78.6. But I want to, you know, remind you, we are still above the 200-day moving average. We do have a lower high in place now. Okay, I showed the weekly chart a while back saying, hey, we're making higher highs and higher lows. But right now, we have a potential lower high in place. Still don't have a lower low. So it's a little, it's more than a little. It's very premature to start calling the end of the market right here. Let's see if we test this 200-day moving average, what we do there, and if we can hold it and get a bounce, or if we're just going to shred through it and get a retest down there of those lows from November. The Qs, okay, yeah, I mean, we were looking at this sideways consolidation, sorry. We're looking at this little sideways consolidation here. We popped up, now we popped down below it. Yeah, that's not good. We're below the moving averages now. You could see here, after hours, sold off about another 15 cents from where it says it closed. And if we break through this level here, the 6240s, suggesting that we go down for a full retracement. So that's the Qs. The IWM, which is the Russell, still, I mean, it still doesn't look that terrible. 50-day moving average, watch that, and then you got the 200 below it, but it does have a lower high in place. It's just amusing to me that it's still above its 50-day moving average here, and not, you know, still a couple points away from testing the 200-day. Let's do a couple of the sectors. Semiconductors, they're caught between the 50 and the 200 day. Clad tanker, same thing. Intel, it'll look like it could get a bounce going, but right now it's basically back to the start of this W. This is one of the dogs of the Dow this year, so this could get some money inflows in from those that participate in the dogs of the Dow or use them for January effects. Just keep that in mind, but that's not enough to buy it off of. You still got to watch it. Here's Broadcom, came out of the triangle to the downside here. AMD, that was a cheapie. That looks like it scraped the bottom here and could be trying to set up a small cup and handle here. Just one to watch. How about the banks? The banks, okay, yeah, still okay. I mean, pulled back, held the 20 EMA for now. You got the 50-day down here. So if there is a deal and there's some relief to it, watch the financials. Here's the XLF. Not acted terrible here, but of course it's a wild card. If the deal is not perceived as okay, or there is no deal made, which I don't think happens, then hey, the financials can look as good as they are. If they're going to sell them, they're gonna liquidate the positions that they've been doing well with. I mean, look at Bank of America, broke out at 10. I mean, this is a quick $1.50 move on a $10 stock is what, 15%. So that's a pretty nice move here. There's profits here, and yeah, some people may want to hold over, obviously, but if they start coming and for fire sale, people are gonna book profits in order to counter the. And obviously, the tide will sweep through all the sectors, but I mean, those that are winners, these nice winners, they're going to get hit because they're going to have to be used to cushion the losses that people are taking in their other stocks. Okay, JP Morgan, these all look okay, but again, I don't think the market's gonna get hit, and these are gonna rise. So we're gonna need some sort of relief move to the upside. Broker dealer, yeah, I mean, this is a bullish pattern. Okay, this is consolidating above the moving averages, but again, okay, it's just a chart pattern. All right, if the news comes out and the market sells off, I don't expect the broker dealers to miraculously sit there and go, okay, no problem, we're gonna rally anyway. Yeah, I don't think that's gonna happen. Okay, here's Goldman, Morgan. These are looking good. So if the market does rally, financials. Okay, cyclicals, looking okay. Tested the 20 EMA down there. Here's the XLB. Not looking as nice as the cyclicals. Look at some stocks like Caterpillar. Yeah, it's caught between the 200 and the 50-day. John Deere was looking okay, but now it could be a little bit of a topping pattern up here. How about biotechs? Yeah, not really doing much. How about home builders? Still okay. Pulling back here, see if the 50-day moving average holds. Toll Brothers, yeah, not the best looking one. I mean, it's above the 200-day, but it's below the 50. Ryland looks really nice pullback. Again, this isn't a defensive sector, so I don't think that if the market gets shelled, that the home builders are gonna rally. But if the market doesn't get shelled, or if the market gets a bit of a bounce, this is another stock to watch. Okay, I mean, this is a really nice looking chart here. Ryland, nice little bull flag here. All right, how about, did I do Beazer? I can't even remember if I did Beazer. No, it don't look like I did Beazer. Okay, not as nice. I mean, Ryland is the best looking one, in my opinion. Okay, here's CTX. No, this is Quest Corp. Yeah, I don't know. I haven't looked at the home builders that deep, but like I said, RYL Ryland. Okay. Oh, how about Hovnanian? All right, yeah, Hovnanian also looks okay, and it's a cheapie. This was a beautiful triangle breakout right here. This is great. Super Gruber was calling the tops and home builders, and this one took off for like a nice big percentage gain. All right, gold. GLD, yeah, creeping under the 200-day moving average here, but stalling out here. Again, I like these types of patterns because you know where you're wrong very quickly. So either it rolls over or it comes up the 200-day and it's a stop. Here's the SLV. Yeah, that doesn't look bullish to me. It looks more bearish. Oil, I was wrong on. I thought oil looked like it was going to move lower. Instead, looks like now it could get to its 200-day moving average. Exxon, yeah, this is not looking so nice here. If it loses these lows down here, which it did by a tick, but if it really loses them harshly, then you got this move right here, going on to the 8340s. ConocoPhillips, yeah, it's pulling back. I don't know why it's not updating the moving averages. Schlumberger, not looking too sharp there. Glamour stocks, Apple. I don't know if this is forming a bottom here or it's forming another move to the downside. This is a triangle. A lot of people say, "Oh, this is bearish. This is bearish." It's a volatility contraction sign. So it's either going to rotate up or get smacked. And if the market does get smacked, and even if it doesn't get smacked, this could, see some more downside and still be, still be way up from where a lot of people grabbed it. Here's the gap fill is 425.10, so that's a pretty nice size move from there, just to hit into the gap fill. So let's see what it does. I'm not saying that it's an absolute short here, but it is not looking that bullish. But right now it's coiled up, so still got to wait and see, right? Volatility trumps direction always. Google pulling back. I actually liked this one until the market got hit, but this didn't really get shelled as bad. You can see here you got a little pullback. See if it can move out to the upside. Amazon, really thought Amazon had a chance to go to new highs. This definitely hooked a lot of people, especially those looking for window dressing stocks. Priceline.com, just messy. CMG, nice little coil here. See if this can get back up above 300. That may have some legs up to the 318 area. Research in Motion, this is a really nice push up here, but this gap down off of earnings, it's got to really offset this high up here. Get up above 1239, see if it can go somewhere from there. Potash, no, not really. Las Vegas Sands, Win, yeah, not too messy with the in relation to the moving averages over there. How about Rackspace? Let's see what Rackspace is doing. Yeah, Rackspace is looking okay here. Yeah, Rackspace is looking okay. There's a nice bull flag here. But again, I don't think it's going without the market. Okay, good. MasterCard looking okay as well. Visa, American Express, nothing to look at there. Adobe, with nice breakout. See if it holds the 20 EMA on the pullback. Let's recap. Fiscal cliff. Let me grab the picture again. Whee! Okay, fiscal cliff diving. Fiscal cliff talks. Congress supposed to get together Sunday night. My opinion is that I think they all come up with a deal. I don't think Obama is going to obviously give in. He's taking a real hardline stance. So I think that it may be enough for a relief rally, maybe more, but starts as a relief rally. But depending on what the compromise actually is, I think there'll be a relief rally just because, hey, we finally got something. But I think that it may be short-lived, or if there's no deal, which I don't think is going to happen. I think there will be a deal. If there's no deal, or if it's really perceived as just horrendous, then we could get a sharp sell-off or a sharper sell-off from here. But I want to wish everybody healthy and prosperous New Year. 2013 is our best year. It's going to be great. and there's going to be a lot of trading opportunities. I know a lot of people are making huge predictions for the year. In my opinion, I just rather wait and see, and looking for some good travel ranges to try to trade the swing. So again, join me in the chat room at I'll start at 6, but I'm really going to get talking about the market till 8, so don't worry if you don't get there right at 6, because I'm going to be in and out probably between 6 and 8, and but I'll start the market talk at 8 p.m. That's Eastern. I will link to the link, the video on how to join the chat room. It's 100% free. I'll see you there, or I'll see you in the new year via the email or video updates. Take care. Have a great trading week and a great new year.